Hello, and welcome to Skills to Pay the Bills. With today's segment of Resources Unplugged, we'll dig into alternative financing vehicles that, when implemented correctly, become a small business's lifeline. I'm your host, Lorette Farris, co-founder of Through the Lens of Small Business, an online platform that brings together entrepreneurs seeking financial resources that they can use today, which is a perfect segue to introduce my guest, Mr. Jack Wilson. How are you, Jack?
Good, Lorette.
Great. Jack is the owner and principal of Liquid Capital. Liquid Capital, to the general public, would be considered in broad strokes an alternative lender. But I believe that term is relative, depending on what side of the SBA's small business statistical metrics you fit in. It's wonderful to hear that small businesses lending by big banks is up 20% over last year. But when you analyze the data, there still appears to be a significant group of businesses that still just don't qualify. You see, the banks only lend to borrowers that need money to grow. But the unbankable businesses, the ones that need money to survive and get to the next contract, are still locked out. This is why I'm so excited for you to hear what Jack is doing at Liquid Capital and how they are addressing the real needs of these unbankable businesses. Jack, did I frame that correctly?
Lorette, you framed that perfectly, and thanks for having me today.
Oh, absolutely. I'm glad that you're here. Jack, before we begin, please tell our audience a little bit about yourself. Who is Jack Wilson and what does Liquid Capital do?
Excellent. Love to do that. So I come from a corporate background. I worked for a large telecommunications company right out of college, and honestly had a lot of different opportunities, a lot of different jobs, learned many disciplines in the business. But while I was doing that, regardless of what part of the country I lived in, I always immersed myself in the small business community. Yes. I represented the corporation, and I had a passion for the people who had a passion for small business. So that really was something that never left me. And ultimately, I decided that's what I wanted to do. I wanted to help small businesses. I really wanted to work with them. And a couple of the disciplines that I learned while in the corporate world really helped me focus in on how I can help small businesses. And that's really what I zeroed in on.
That's fantastic. And I got to tell you, I love the term. I love the name of the company, Liquid Capital, because just the term, it gives that visual. So when we say liquid capital, when I say alternative financing, can you also talk to us about what is alternative financing?
Yes, and first of all, when you think about the name Liquid Capital, for most small businesses, when you think about what's their greatest asset, their greatest asset usually isn't a fleet of trucks. They're not there yet. It's usually not a large piece of real estate. They probably haven't gotten that yet. But what it usually is their invoices. Mm-hmm. So what we help them do is liquidate their greatest asset and give them some funds so that they can grow their business. So alternative financing is something that's just non-traditional. When you think about going to a bank and getting a loan, yes, that's an easy way of getting the money. Typically, that's what you think. Mm-hmm. Low cost, perhaps family or friends or your retirement. Those are all ways you can get it. But alternative financing is typically when the bank says no for whatever reason. You're a new company. Perhaps you've had some other challenges or issues. They haven't seen the track record yet. And for those times, you want to look for alternative means of financing. Because it comes down to this, Lorette. The most expensive money out there is the money that a small business cannot get when they need funds to grow.
Yeah, it's significant that you say that because I have factored. I owned a security guard company. And when we ran into issues in getting payroll done, I understood the space. So I did find the company and I started factoring my invoices. But I think we still have to step back for a moment for our audience to understand what are we talking about factoring and selling invoices.
Okay, excellent. And again, that's one form of alternative financing. There's short-term, high-interest rate loans. There's asset-based lending. There's purchase order financing and factoring. We'll just focus on the factoring for now. So it's a simple process where a factoring company will agree to purchase the invoice. And basically all that means is they'll advance a certain amount of money to their client, meaning the small business. So the client's not just waiting for that money for who knows how long, but they'll get that money in advance, and their business that they have as a customer will actually pay the factor. So what does that do? It gives that small business a chance to not have to wait for 30, 45, 50, 60 days or more. They get the funds right away, and they can put it right into their business to help it survive or even grow.
And so on that note, you have a lot of information out there that is not necessarily correct. So when people hear alternative financing, when they hear factoring, when they hear purchase order financing, I think it's a little different today because alternative financing is now so much more mainstream than it's ever been. However, there are the tales of how, that might not be, something for you to look at. Can you talk to us a little bit about small businesses who we are mainly focusing on, small businesses as it relates to what they can or can't do under alternative financing versus the vehicles of traditional financing? How is that the relationship playing out for small businesses today?
Excellent. It's an excellent question and very astute comments on your point. Many times I have to educate small businesses on the pros and cons of doing using some of these alternative financing tools such as factoring. There seems to be a stigma around some of it, and typically once the small business person is educated, they see it's not something bad, but perhaps it's a tool that really works for them in their circumstances. So that's really the first part, is educating yourself on the types of funding that's out there and then match something up that fits them. Let's say a startup company is going to have a very difficult time when they walk through the doors of a bank and ask for a loan. They have no history. Factoring might be a good opportunity for a startup company in specific situations. If they have a very credit-worthy business customer, it's highly likely that a factoring company will be able to advance them funds on that. If they have perhaps bad personal credit, or they have a few bumps on their personal credit, maybe an IRS issue or something like that, a bank's not going to want to touch that. Generally speaking. A factoring company, again, they're not going to focus on the credit worthiness so much of the small business. They're going to look at the credit worthiness of the asset that they're buying, the owner of that invoice, which is perhaps a bigger company with a more established track record. That's what makes a big advantage for small businesses to use something like factoring to give them the cash they need to survive or to grow their business.
With iBoss, we work with, and iBoss being the other company I am a co-founder of, we work with small businesses trying to help them get to seed capital or their first round of financing. And I have found it invaluable to use the services of alternative financing because, as you were just saying, those same companies have such a tough time getting the attention of the traditional banking industry or even in the equity market. When it comes to, so let's switch gears a minute from factoring invoices, but let's talk about purchase order financing, for instance. I've also found for small companies, startup companies, they land a contract, but then they can't start that contract because of the expenses that you have in start. They got to hire people. They may have to put certain equipment or processes in place. Can you speak to the purchase order financing side as it relates to that?
Yes, and again, that's a service that once a small business understands how it can work for them, and then when they use it strategically, it can help them. So it primarily ends up being, in general terms, a letter of credit. that basically commits to the one who, their supplier, that there's a financial backer that will make sure this gets paid for. And they're more likely then to provide the supplies or the goods or products that that small business needs to fulfill their contract to their customer.
Right.
So it works that way, and it gives them obviously the access to what they need to make money.
It's really very interesting how many vehicles and tools are out there for businesses in general, and small and startup companies, minority-owned companies, women-owned companies that are locked out of so many they're so used to hearing no, that was one of the major reasons I wanted to make sure we had you on this session of Resources Unplugged, because I think that the services that you bring to that market are tremendous. These businesses otherwise can't get next to it, next to the capital. But what I want to make sure that we also uncover are some of the other avenues that make a difference for a small business that they may not be paying attention to, and I know that you'll be able to fill us in. I'm going to start the conversation then when we come back, but for instance, what other critical areas do you know, see, and understand that small businesses don't recognize?
Yes, there's quite a few of them. Knowing your numbers, straight up, understanding things that really are going to be the points of the conversation you're going to use when you do talk to a bank or any financial provider. So knowing your numbers would be one. Putting together a plan for revenue assurance management. Most people don't understand what that is.
Yeah, we need the other side of our segment to get into that.
We'll discuss that. Okay. And then too, a lot of times they don't have well-rounded advice. So that they're looking at things through the lens of their own experience, which still could be limited. So those are the kind of things that I think I've seen.
Right. Okay. So again, as soon as we come back from our break, we're going to get into that plan, and we're then going to talk about the other things that these companies need. We are going to take a short station break, then return with Jack Wilson of Liquid Capital to continue unplugging resources you thought were beyond your reach. Stay tuned, as you won't want to miss one word.
Join our mission to proclaim the gospel of Jesus Christ. Every week we feature a medley of gifts from artists, performers, ministers, and more. Experience the Lord's everlasting light in the cool of the day.
Welcome back. You are watching Skills to Pay the Bills and today's segment of Resources Unplugged. Our special guest is Jack Wilson, owner and principal of Liquid Capital. Jack, we touched on some pretty significant things in the session that we just ended, and I want to make sure that I pull out of you a few other things I think our audience need to know. You started talking about you got to know your numbers. Help us to understand, what do you mean by that?
Yes. First of all, every business owner should know their numbers. And when we talk about knowing their numbers, that means know where you are financially. Know what you need, know what you have, know how long that can last you. It's no different than if you're in a car and you're traveling someplace, you don't know quite where you're going, but are you going to do that if you don't know how much gas is in your tank? Then it causes anxiety, it causes worry, and at the worst, it could cause you to shut down before you get to where you're going. And the same thing happens with a business. So knowing your numbers would be having your numbers, first of all, and then knowing what they mean to your business. Things like your cash flow statement, your P&L, your profit and loss, your income statement, your balance sheet, and then how do they all relate, and how do you use those as tools in your business plan to grow your business? When you can articulate those things, then you can have a real conversation with a banker or with an alternative finance provider, and it instills confidence in them that you have control of your business, as well as you have a plan on what to do going forward.
It's interesting, the last two statements that you made, having a plan and knowing I'm on the equity side of the market. It's the exact same thing. Investors need to understand that you have a real plan and you understand your numbers, just like in lending. So I think that's key for businesses to understand in general. Another point that we would be remiss not to bring up are the risks that may be associated within the alternative financing space. Can you speak to that?
Yes, and so we talked earlier about the stigmatism that had sometimes been around, and maybe that was just because some people have had some difficult situations. So when we think about it, whenever money's exchanged, whenever money's involved, there's a risk of fraud on either side.
Right.
There is some things that could go wrong. There are things that can go wrong. So there are some things that you need to look for too. You want to make sure that whatever company you're dealing with has a good reputation.
Right.
They have the financial capacity to handle what you're doing. You don't want them to get to the point where they say, I can't provide you any more money even though I agreed to do that. So you want to do your homework that way, and you can get referrals from bankers, from your CPA. Ask to speak to customers who those providers are already servicing. That's what I do. I like to have my own clients talk to prospects because they can have a different discussion, owner-to-owner discussion, and then an educated client is the best type of client to have. So that would kind of minimize some of your risk, but it doesn't eliminate them. No matter what, there's always some inherent risk when we're dealing with money.
And so a thing that I like that you said there that I hope our audience heard also is when you said you can get referrals from banks also. So again, it's not that these alternative methods are totally outside of the mainstream. Bankers, when they have a client that they can't do something for, they also look for resources to send it to. And I would imagine alternative lenders are a good resource for bankers to utilize.
You're right, Lorette. I don't think there's been a week that's gone by that I haven't gotten a call from the bank, from small banks to the largest banks in the country that are in my area, that call and say, hey, you know, we have a good client. We're not able to increase their credit line. They have good credit, but Jack, we can't help them any further, and we don't want to say no. Can you help? That's how I get referrals from bankers.
And so that's wonderful. You're in the place that you could work with people who credit may not be as well as you can work with those that do have good credit.
Absolutely.
That's a perfect place to be in.
Yes, it is.
There is something you brought up that I'm looking forward to understanding a little more about it, and that is the Revenue Assurance Management Plan.
Yes.
What is that?
Yes, so revenue assurance management is a process that can be very robust, it could be very simple, but it's basically a process, an end-to-end process that covers the full spectrum of what happens from the time you identify a prospective customer until the time they either pay you or you have to seek help getting paid. So it's a plan that says, here's how we qualify those customers we're going to sell our goods or services to. You'll use credit bureaus, things like Dun & Bradstreet, and so forth to qualify the customer. Otherwise, you're just lending your services or goods to a business that can't maybe pay you back. The other piece is, you know, what's the process to create an invoice that can hold up in court? An invoice that is matched up to the contract that you just signed. So many times we see invoices that just say due upon receipt. Now when you look at the contract, it says net 30, net 45. Well, guess what? There's a disconnect. And guess who created that disconnect? The small business owner, by not reading and understanding their terms. A revenue assurance management plan has that as one of the checkpoints to put these things into place. Then when the invoices go out, when they go out, is there a process to make sure they go out at a timely fashion? Is there a process to confirm that our customer has received that invoice and that they're going to pay it according to the contract terms? And then there's a time to call. All of these things right down until we get the payment on those goods or services that we actually had. And then there's even pieces past that when the payment doesn't come in according to the contract terms. When we have a very tight revenue assurance management process, our customer knows, and guess whose bill they're going to pay first? Ours.
Right. That's significant. And at Liquid Capital, you guys actually work with your clients through those type. That's significant. a lot of small, new, young startup companies know how to do what they do, but when it comes to the administrative processes, they lack experience in doing it. So it's significant to know that if they're working with a company such as yours, that type of support is there.
Right, and in fact, that's one of the things that you want to look for when you're going to pay a fee to get money. What do you get for it besides the money? And when you work with a company that does some of the things that we do, what my clients appreciate is exactly what you said, Lorette. Mm-hmm. What they get to do is what they're good at. What we do for them is what we're good at, and then they can spend their time making money. We'll make sure that it gets collected on time for them.
That's very cool. That's very cool. Okay. So let's pull back and talk about some other things that we know are necessary for these businesses to understand. It's one thing understanding their finances, but their management needs to be in place in order to get to their finances. And I know that there is a big area that has a void in that respect. And I'm leaning toward that whole board of directors, advisory boards, things of that nature. And when it comes to financing, whether it's traditional or alternative, is there, and I want to talk about those in particular, but is there a space where the finances become concerned about who's running and managing the business?
Absolutely. So even with alternative financing providers, what they're looking for is the leadership team. They want to know, does the leadership team have the capacity to provide the goods or services they say they're going to do? Because remember, they're going to buy this invoice, right, and the invoice is only going to get paid by that customer if it's delivered, if the goods are delivered. So yes, we definitely look for that. But we also look to know, so tell us about your board, your advisory board, your board of directors, because we know that adds stability. Yeah. We even ask for a resolution from the board that they're going to work with us. So that gives us a lot of confidence that it's not just the one person, but the person is getting the expertise of various others, so that helps in delivering the goods or services they're promising their customers.
What recommendation would you have for both startup, because I know the nuances are a little different. What recommendations would you have for startup companies and then for small operational businesses if they want to speak with someone about alternative financing? What do they need to come to you with? What do they need to understand?
Yes. Well, first of all, they should know their numbers. They need to know also what they need and why. That's the question that gets asked. So the question is always, well, how much do you think you need and why? What are you going to do with those funds? So they absolutely need to do that. But then they need to go through their due diligence. They can ask around in the financial world, ask CPAs, business attorneys, bankers, hey, I'm looking for an alternative finance provider, anybody you know. Talk to business groups. When they're working with someone from organizations like SCORE and some of the other nonprofits, they know. In fact, I deal with those types of organizations all the time. Right. Minority business development agencies, the minority the minorities, exactly. Those types of organizations, they're a resource, and small businesses need to use them. And they can say, hey, check these guys out, check these guys out. And some of them will even give a list of alternative funding providers as well. So make use of the free resources first. Yeah. That's a whole lot of homework being done for you, and then get deep into your due diligence.
This was really, really significant. I want to pull something out of you because I want to try to get you back on the next show. I heard somewhere that you're starting to work with some organization that is helping companies to figure out board of advisors, board of directors. Is there anything that you could say right now that I haven't let out before it's time?
Yes, I could say that The hardest thing for a small business to do is invest the time to really get the right type of advisory board to guide them through. Now, advisory boards are unpaid, but the cost is the cost of the time that the small business owner takes to find the right people. They're usually focused on their business. Right. There's a resource available now where that work is done for them, and then they can actually just pick and choose pre-qualified people to make up their advisory board. And I'd love to talk more about that.
That's fantastic. I heard you say that, so we will set another time that you can come back to Resources Unplugged, and we'll hear a little more about this ability to assist with the advisory boards. I look forward to that.
Love
Jackie,
to.
thank you so much.
Thank you.
In closing, we would like to say thank you for listening. We think you could pull a lot of resources out of what Jack just had to convey to us, and I look forward to each of you that may have questions sending them in. It was a pleasure to have you as our guest today, Jack. Liquid Capital epitomizes the type of resources through the lens of small business wants to ensure its community is aware of and has access to. Our Resources Unplugged audience looks forward to the next blessing you have in store for us. And in closing, I encourage our viewers to check in for our next episode of Resources Unplugged as we continue to vet programs and other resources to enhance your business management processes. Thank you again for watching Skills to Pay the Bills and today's segment of Resources Unplugged, Tools to Grow.